Hello and welcome. Today we are diving deep into the world of NFT taxes right here in the UK. And to make sure we get it right, we've partnered up with the absolute specialists at My Tax Accountant. Look, we all know the world of digital assets can feel like a total minefield, and with the rules changing all the time, you need real clarity. So let's get into it.
So let's start with something you can probably relate to. Imagine this. You've just sold an NFT for a cool £5,000. Brilliant. But what happens now? Does the taxman want 500 quid or is it a whopping 2,000? The answer? Well, it's not as simple as you'd think, and getting it wrong can be a really expensive mistake.
And that's exactly why we're relying on the expertise of My Tax Accountant to guide us through this. These guys live and breathe crypto and NFT taxation. They've helped us put this whole thing together using the very latest rules and figures fresh from the 2025 budget. So you know the information you're getting is as up-to-date as it gets.
So here's what we've got lined up. We'll start with why NFT tax feels so, well, confusing. Then we'll get straight on what HMRC actually thinks. After that, we're going to walk through the two different paths, one for creators and one for collectors. We'll cover the key numbers for the 2025/26 tax year, and then we'll finish up by looking at what's coming next.
Right, first things first, why is this all so complicated? If you've ever felt completely lost trying to figure out what you owe on your NFTs, trust me, you are not alone. It really does feel like the Wild West out there, because the rulebook is basically being written as we go.
And this quote from Outlier Ventures just hits the nail on the head. There isn't a specific NFT tax law. What that means is HMRC has to take old existing tax rules and try to apply them to this brand new technology. And you know what? It's not always a perfect fit. That's the gray area where getting proper expert advice is just absolutely crucial.
So how do we even begin to make sense of all this? Well, it all boils down to one fundamental question. What does HMRC, the taxman, actually think an NFT is? Their answer to that question is the key that unlocks everything else.
And here it is, the most important point of all. HMRC is crystal clear on this. NFTs are not money. They're not currency. For tax purposes, they are a crypto asset. Just think of it like a piece of property, like a painting or some company's shares. And that little distinction is so important because it means that every time you sell, trade, or even gift an NFT, it counts as a taxable event.
Okay, now that we've got that foundation down, let's explore the first of our two main journeys, starting with the creators. This one's for all you digital artists, the musicians, the makers, anyone bringing new NFTs into the world.
So let's follow a fictional digital artist. Let's call her Anya, in Bristol. Her tax journey has three main parts. First, when she mints her art on the blockchain, those transaction costs, the gas fees, are a business expense. Simple enough. Second, when she sells her creation for the first time, whatever crypto she gets is treated as her business income. And third, any royalty she gets from future sales, yep, that's also income.
So for creators like Anya, the main takeaway is this. The profit you make is treated as income, and it's subject to income tax. But that's not all. And here's a bit where people often trip up. You have to value the crypto you received in pounds on the exact day you received it. That value is your income figure for tax. It's not what it's worth a week later if the price shoots up or down.
Now for a really important pro tip. Since this is treated like a business, you can deduct allowable expenses to shrink your taxable profit. Honestly, keeping good records is your absolute best friend here. You need to track every single gas fee, every marketplace listing fee, any money spent on ads, and your software subscriptions. You can even claim a portion of your home office costs. All of these deductions directly lower your final tax bill.
Okay, let's completely switch gears and look at the collector's journey. This is for everyone who buys, holds, and sells NFTs that other people have made. So let's follow our next example, Ben, who's an NFT fan based in London. His tax situation is going to look very different from Anya's.
Now this next point is really crucial, so stay with me. HMRC makes a big distinction between investing and trading. If you're like Ben, buying an NFT to hold as a personal investment, kind of like you'd buy a piece of art, then when you sell it, any profit is subject to capital gains tax. But if you're buying and selling NFTs all the time, flipping them for a quick profit, HMRC is going to see that as a business activity, and your profits will be subject to income tax instead. For most collectors, though, it's going to be all about capital gains. So let's assume you're an investor. That means your main concern is capital gains tax, or CGT for short. The good news is the calculation is actually pretty straightforward once you know the steps, so let's break it down.
Here's the formula. You start with the final sale price, in pounds. From that, you take away what you originally paid for it. And here's the step lots of people forget. You also get to subtract your costs, like the gas fees you paid when you both bought and sold the NFT. Whatever is left over, that's your taxable gain.
Let's use Ben's example to see it in action. Say he sells an NFT for £8,000. He originally bought it for £2,000 and he paid about £150 in gas fees for both buying and selling. So his total cost is £2,150. He subtracts that from the $8,000 sale price, and that leaves him with a taxable gain of £5,850. That's the number he needs to tell HMRC about.
You see, getting this calculation right for every single trade is so important. It all comes back to keeping detailed records. You need dates, prices in pounds, and all those little associated fees. Without those records, trying to calculate your tax accurately is, well, it's pretty much impossible.
Okay, so now we know how to calculate the profit. Let's talk about how much tax you actually pay. These are the absolutely essential rates and deadlines for the 2025 to 2026 tax year, all based on the recent 2025 budget. You'll want to pay close attention here, because these are the numbers that are going to directly affect your wallet.
Right, think of this slide as your tax cheat sheet for the year. First up, you have a capital gains tax allowance of £3,000. That means you can make $3,000 in profit across all your assets completely tax-free. Nice. For any gains above that, you'll pay tax at either 10% if you're a basic rate taxpayer or 20% if you're a higher rate taxpayer. For our creators out there, a huge number to watch is the VAT threshold of £90,000. If your turnover goes over that, you might need to register for VAT. And finally, that all-important deadline, to file and pay for this tax year, you've got until the 31st of January, 2027.
Now, one thing's for sure, the tax world for digital assets never stands still. There are huge changes coming down the line globally, and the UK is right in the middle of it. So let's have a quick look at the future, because this is going to affect absolutely everyone involved in crypto and NFTs.
The big one coming is something called the Crypto Asset Reporting Framework, or CARF for short. It's a massive global project to clamp down on tax evasion, and the UK has signed up. It's all happening pretty fast. By 2026, crypto platforms, think OpenSea, Coinbase, all the big names, will be legally required to collect user data and report it straight to HMRC. By 2027, tax offices around the world will be automatically sharing this information with each other. So what's the takeaway? The days of crypto being invisible to the taxman are numbered. Full transparency is coming.
So, let's do a super quick recap of the absolute must-knows. 1. HMRC sees NFTs as property, a crypto asset. 2. If you're a creator, your profit is usually income. 3. If you're a collector, your profit is usually a capital gain. 4. Keeping good records isn't just a nice idea, it is essential. And 5. Just remember that these rules are changing, and a whole lot more transparency is just around the corner.
We have covered a ton of ground today. And I think it's pretty clear that while the basics make sense, applying them to your own specific situation, well, it can get complicated pretty fast. And the stakes for getting it wrong can be really high. But the good news is, you absolutely do not have to figure this all out on your own.
For expert advice that's tailored specifically to you and your situation, we really do recommend getting in touch with the team at My Tax Accountant. All their details are on the screen. You can give them a call on 0208-570-8531 or drop them an email at info@mytaxaccountant.co.uk. And just a final, very important disclaimer. Please remember that everything we've talked about today is for general guidance. It is not a substitute for professional, tailored advice. So before making any financial decisions, always consult a qualified expert, like the team at My Tax Accountant. Thanks so much for joining me.